doing it again. We are doing it again. Fannie Mae just decided credit scores are optional, and Trump's team wants to stretch your mortgage out longer than most marriages last. And if you thought the housing market couldn't get any wilder, buckle up, buttercup, because it's starting to feel like 2008 all over again. Listen, we're talking about the rule changes that sound like good news. Hey, easier loans. But could easily turn into congrats. You now owe your house until retirement situation. So before you toast the affordability housing 2.0, let's unpack what this really means for buyers, sellers, and anyone who'd like to not live in their lender's shadow forever. I am Laura Lalaki, your international real estate agent, helping you to find your home sanctuary domestically and abroad. Okay, let's talk about what's going on in the housing market right now. I need a good glass of port wine right now because it's starting to feel like deja vu. Deja vu? Who remembers that song? First, Fannie Mae just announced it's dropped the minimum credit score requirement for loans starting November 16, 2025. Then, the Trump administration teased a new 50-year mortgage as a fix for the affordability crisis. And both are being sold as ways to help people finally buy homes. But if you've been paying attention, you know sometimes help can come with a long, expensive catch. So let's break it down together. What these changes could mean for you, what's good, what's risky, and how to protect yourself before you decide that you're going to jump into this pool, right? The market right now is a whole lot of weird. If you've tried to buy or sell lately, you already know that it's messy. Prices are high and sellers are refusing to come down. Buyers are walking away in record numbers. According to August 2025, it had the most canceled deals we've seen in years. And I did a whole nother video on that, so go check that out. Now, builders are also desperate because a lot of them are offering 1% interest deals just to move houses. But even that isn't really working because consumer confidence is down. People believe prices will eventually drop, so they're waiting it out. The market's basically frozen, and now we've got brand new lending rules being tossed into the mix. So Fannie Mae says goodbye to credit score requirements, but what does that look like? Well, starting November 16, 2025, Fannie Mae will stop requiring a minimum of a 620 credit score for borrowers. That means if you've got steady income and good payment habits, you could qualify, even if your credit report isn't perfect. Now that sounds amazing, right? All right, yay! But let's be honest, there is a flip side. So let's look at the actual upside first, because I like to, keep it balanced. One, this opens doors for more buyers. A lot of responsible people are getting blocked from buying homes simply because they don't have a traditional form of credit. And this actually could finally give them a fair shot. Two, it opens smarter underwriting tools. So lenders can now look at things like rent payments, utilities, and income instead of relying only on your credit score. Now that's real life financial behavior, right? Three, it encourages inclusion. Now this change could help first-time buyers and others who are rebuilding their financial lives, and they could be doing this if they handle it responsibly, right? Now, here are some downsides. Listen, this puts more risk in the system. Credit scores exist for a reason. They help lenders to measure risks. Now, take them away, and loans could go to people who aren't really ready for the long haul. Two, this also means higher interest and fees. Even if you qualify, you're likely to pay way more if your credit history isn't great. So yeah, you can get approved, but it is going to come at a cost. Now, three, don't this sound familiar? Yeah, we've been here before. Looser standards, overconfident lenders, and buyers stretched too thin. We know how that story ends, hence 2008. Now, toss in this mess. Trump's 50-year mortgage idea. The Trump administration says it's working on a 50-year fixed mortgage to make monthly payments smaller. FHFA Director Bill Pulte called it a complete game changer. I got issues with him. But let's be real. It's definitely a game changer, but not everyone's convinced it's the right game to play. So what are the pros of the 50-year? Well, you'll get lower monthly payments. That stretches a loan over 50 years. That could actually make it affordable again for some of the first-time buyers, right? 2, it could give you a little bit of breathing room. If you're trying to get out of renting and into owning, this could be the difference between a yes and a no. 3, it could be pretty flexible if you could still pay it off early. The longer term just actually gives you options. But all right, let's talk about the cons. You're going to pay a whole lot more in interest, like a lot. A 50-year mortgage can cost hundreds of thousands more over its lifetime. 2, you may never actually own it outright. Critics are calling it debt for life. You could literally spend your whole adult life paying for the same house. 3, this doesn't fix the real issue. The problem isn't the loan length, it's that homes cost too much. Extending the mortgage is just a way of stretching the pain. So what does all of this mean for you? Here's the truth. These moves sound like help, but they're both band-aids on a much bigger wound. Neither Fannie Mae's rule change nor the 50-year mortgage solves the real issue: the cost of homes and stagnant wages. If you're thinking about buying, slow down and ask yourself, can I really afford this payment long term? Am I buying because it's the right time for my life or because the loan makes it look affordable? Am I leaving room in my budget for life to happen? Because it will. And if you're already a homeowner or a seller, understand that the market, it's shifting. Buyers are more cautious and better informed. Overpricing your home in this climate can cost you more than waiting for the right offer. So here's the bottom line. These new ideas might make it easier to qualify for a loan, but that doesn't mean that they make home ownership easier. You can't stretch your way into affordability. You either have the budget for it or you don't. If lenders and policymakers don't tread carefully, this could be the same slippery slope that led to the 2008 crash. Only this time, it'll come wrapped in buzzwords like access and innovation. So before you sign anything, run the numbers. Know what you can handle. Be realistic, because the best kind of homeowner is a prepared one. Now, if you want to talk real talk about housing and credit and the economy without the media spin, make sure you subscribe to my newsletter. And because being prepared starts with knowing where your money is going, grab my free budget planner while you're there. It'll help you take control of your finances. It'll help you plan smarter and be ready for whatever this wild market is gonna throw next. So make sure that you subscribe, you share, you stay informed, because your financial future deserves better than fine print and wishful thinking and magic glitter. Yeah. Until next time, go be a good human. You never know when a smile's gonna save somebody's life. Sugar. Bye.